Hello and welcome to the Cryptocurrency News Channel. This is going to be the TAFA and chart analysis for February 5th, 2022. Now, the thing about this is that we maintained yesterday's prices, but the volume has gotten much lower. That's to be expected. It's the weekend. No big movements in the stock market basically equals no big movement in crypto. This tells you that we're exactly following the stock market. Although that it seems like the tech sector's reports are over, we actually have several big earnings reports next week. The inflation rate still stays at 7.2, and people are trying to price into the market as many as 6 Fed interest rate increases of about 25 basis points each. That would result in a year-end interest rate of about 1.5%. If they possibly do 6, I'm sure the market will react and go down, but it should also be kind of temporary. Economists are also saying that inflation rate should come back to about 3%. If they do all those hikes, or at least they hike 4 times, the inflation rate should come down to about 3% by the end of 2022. And 3% is a very manageable inflation rate. So at that point, I think the market confidence will actually return because 1.5% interest rate is still very low. 3% inflation rate, I think the market will have confidence and start growing. And I think you'll see the results of some of the inflation easing by mid-year. So right now it's still a little too early, and we'll have to see what the Fed says, like how many times they'll actually hike interest rates. I think some people are expecting it. I do expect part of that to already be factored into the price because the Fed did say earlier this year they're going to hike it at least 4 times. But either way, I don't really know what's going to happen exactly next week, but you have to look for like Coca-Cola, Pfizer, and other stock reports. Even though they don't directly affect the crypto sector as much as the tech sector, they will actually affect the crypto sector as well because all the stock indexes, whether it's the NASDAQ, the Dow Jones, the S&P, they're all correlated. Except for a very few days like yesterday, they generally move in the same direction. So if like Coca-Cola's earnings are bad, if Pfizer's earnings are bad, I can't really imagine Pfizer earnings being bad with a vaccine and all. If Pfizer's earnings are bad, or if other big companies' earnings are bad, it will probably drag the Dow down, and then it'll probably drag the rest of the indexes down too. I'm not really sure how that's going to turn out, but I think like the movement is not going to be a huge pattern. It's going to be like day by day. Very much day by day pattern. Just like last week when like Facebook was good, but Facebook was bad, but Amazon was good, and Microsoft was good the day before. So like one time up for Microsoft, one time down for Facebook, one time up for Amazon. There's no more labor report coming out next week, so that's going to be a bullish influence all the way throughout at least the next week. So my guess is going to be slightly up next week. We've already broken 40,000. Hopefully, if we can get above 45,000 now, that would really tell me that we have at least the first big signal for a bull market to see if we can actually increase. But right now, the inflation fears are definitely still there, as that's still at 7.2%. However, like I said, if the economists are actually right, and we do get it down to about 3% by the end of the year, I think that's going to be a good signal for both the stock market and the crypto. I don't really see the stock market crashing all that much. It might not go up all that much this year because of the inflation hikes, but towards the end of the year, it should start edging up, and we should actually carry over into early next year too. So we might not actually see like an all-time high until the end of the year, or maybe even early next year. I think Benjamin Cowan actually said that as well, but for different reasons. He thinks it's a lengthening cycle. I personally think it's just following the stock market. But at some time, I don't think it's really going to dip that much more because I think good economics numbers in terms of jobs reports always kind of trumps out like interest rate hikes and that stuff of that nature. But I'm actually glad we've actually been able to maintain Bitcoin prices so far for yesterday's pump. That means like people aren't selling off, they're still holding on, and they're not just like going for small profits. Because if you really look at it, we did actually go from 36,000 to 41,000, and that's 5,000 points. That's a good amount of profit people have taken. They're not taking it right now, so we're really looking at hopefully further increases. I think signals you want to look for are definitely both the European stock market and the Asian stock market, because those open way before the U.S. stock market, since they're like half a day ahead of us. And I think that will give us a signal, kind of like how crypto is actually going to react. Also, obviously, the opening bell. Look at the basically like the S&P futures, the NASDAQ futures, before it opens. Look at the pre-market values, because that will actually show you kind of like how we'll open at the how the opening bell will open. My guess is it's going to be slightly up, but I could definitely be wrong. Looking for that surge past 45,000. On the technical, like basically, I would say very short term. Once again, for the next 7 days, it's going to be positive. Although you do need to look out, the average directional index is getting weaker. And right now, both the stochastic at above 80 and the commodity channel index at above 100 are actually pointing towards sell, because it could actually be overbought. We move from oversold to overbought very, very quickly. The directional indicator has not been able to move yet. The momentum is kind of like evened out, and MACD level has gotten better, so it is actually a sell. It is actually a buy right now. But because the stochastic and the commodity channel index is overbought right now, you do actually need to be careful. On the moving average, like they're all going to be buy because we switched so quickly. But from the 50 onward, there's still sell, and the 50 is still way below the 200. We still need a couple more 1,000 points for that to actually change. So like I said yesterday, nothing much has changed all that much. I would say that right now, like buying for maybe the next week, depending on the earnings reports, could actually be a good idea. Unless you know that Pfizer and Coca-Cola are going to report like horrible earnings reports, then you should sell. But if you don't know that, I think it's slightly favored towards buy for next week. For 1 month, for the weekly, the oscillators are pretty much neutral. Nothing's overbought, nothing's really oversold. Well, the stochastic is oversold still, so we might still have a little bit of room to grow. But all the moving averages are still pretty far on sell, all the way up to the 100 weeks. So we haven't really moved enough to get the weekly moving average out yet. My guess is that I do think there's a decent chance we'll make it to 45 and change the 10 week, but I don't think we'll change the 20 or 30 week. I think gains could actually be kind of limited right now. Even if we have like a mini bull market that lasts maybe only a week, I think gains could be pretty limited right now because the inflation is really, really high still. And people are still kind of like apprehensive because of the interest rate hikes. Now, if the stock market turns and people are seeing bullish again in the stock market, that could change everything. But I don't think the consumer confidence is back yet. However, just the fact that people aren't actually taking jobs and a lot of people are just looking for better jobs or jobs that pay more means the economy honestly isn't really that weak, despite what the inflation numbers actually say. So maybe people still have some leftover money to actually invest in highly volatile assets. They're not really interested right now. Most people are still de-risking. But if the stock market turns in some really positive reports next week, I think we'll see a very gradual change in that happening. Because if companies are earning a lot of money, and even if they do hike the interest rate, I think the economy will still be pretty strong. On the 1 month, on the monthly thing, on the monthly channel, essentially all the oscillators are pretty much neutral. The exponential moving average for the 10 is still sell, and that's the one I'm looking at. Once again, 45,000 would actually change that. And I think at 45,000 would be positive year over year. So that's really what I'm looking at right now. I'm definitely looking at 45,000 right now because that's the point where everything kind of changes and where everything essentially flips to buy right now. So monthly wise, I would still say it's a sell until that actually flips. And I think you may not reach it because I think we only really have until mid-month to reach it before we get kind of bearish and shaky again, before the euphoria from the labor market kind of wears off and the good earnings from the tech sector wear off. And then we have to worry about future expirations for the second half of the month as usual. So if you're going to buy, I would buy right now. But if you don't buy within the next 3, 4, 5 days, probably wouldn't buy for the rest of the month, based on what I'm seeing in the signals. Make your own decision as always, do your own research, but that's kind of what I see right now. Overall economy is still shaky, but I think we'll be much, much stronger towards the end of 2022. So that's the news for today. Let me know what you think, like and subscribe, hit that bell notifications button. Thank you and have a nice day.